my name is Kyrelle Buckley. Currently living in Las Vegas right now. I've been there about 2 years or so.
Nice.
Yeah, it's definitely pretty cool. Yeah, I grew up in the Washington area, so near like Seattle.
Okay.
Yeah, I ended up relocating over to Vegas back in like the start of 2022.
Okay.
So yeah, we're definitely liking it a lot. Yeah, it's nice to have some sun out there.
Yeah, for sure. How did you get into trading as a career? Is that your career? Do you work outside of
Yeah.
trading as well? Tell us a little bit about your experience.
Okay, cool. So it was kind of a crazy story. So at the time when the pandemic happened, so it was around March of 2020 at the time. I was just like driving Uber, like
Mm,
downtown Seattle, and I was making pretty good money doing Uber. I definitely enjoy, it was kind of the semi freedom of being self-employed,
mm,
not having a normal boss. So I definitely enjoyed it, but I was definitely at a point in my life where I was kind of in a rut and I wanted to just try something new. I didn't really know where my life was going. I was kind of just going through the motions. So yeah, so the way it kind of happened is, fast forward, right? Pandemic happens, everything kind of shuts down,
mm.
and it was around like April, May, and then I had a buddy of mine I used to work with. He had hit me up about trading. So I think he had joined it was like an educational academy for trading.
Okay.
So he had hit me up about it, and say, hey, if you want to get into it. So at the time, I kind of blew him off a little bit, right? I heard him, but I was like, oh, and then, right, yeah. So then fast forward, I saw him and my other friend, they were kind of trading together. So,
Okay.
me, I'm definitely more of a curious person. So when I saw that, it kind of sparked my interest. I was like, so I hit him up again and I was like, hey, bro, what's going on with this thing? So yeah, so he ended up getting me on a call. He kind of just showed me what he was doing, and I ended up joining the academy he was a part of. The
Cool.
talk trading basically. So yeah, so that's kind of how I got into it. So for me, it was pretty interesting. I definitely felt like it was one of those things where the moment I got into it, I just kind of knew that it was meant for me. You know what I
Mm,
mean? And
yeah.
and it's pretty interesting because I had saw trading before, like on YouTube and stuff, but it definitely was pretty overwhelming. I mean, you know how it is, right? You see the charts and stuff.
Yeah.
It's a lot to take in. So yeah, so it's funny because I remember that first day. So I'm in the academy, kind of just learning the ropes, the basics, and it was one night like many people where I open up a demo account, right?
Yep.
And then, I take that first trade on the demo and it goes into profit. And it was like that one moment right there. I just knew I'm going to do this no matter what, and
Awesome.
I made that choice instantly.
I love
So yeah, yeah. So that was back in 2020. So I stayed in the academy for about a year and a half. I definitely learned a lot, met a lot of cool people.
it.
And then the kind of what happened was I ended up meeting my now mentor. Wasn't part of the same academy,
Okay.
and I discovered him through an educator actually that taught in the academy I was in. So
Nice.
he had brought my mentor on as a guest, and I kind of saw the strategy he was using,
Mhm.
and at the time, it was very unique and kind of sparked my interest. So yeah, so eventually I ended up kind of leaving that academy I was a part of and kind of being mentored by my now mentor, and that's kind of what led me to where I'm at now, basically.
That's amazing. It's really good. It's really great that you found yourself in a situation like that really early on, right? Because some
Yeah.
people forget that it's really important to have that community and mentorship in an industry like this. And some people go in solo and have a really difficult time. So that's great that you found that so early on in your trading career. I bet you that has helped you tremendously throughout everything. That's amazing. So how did you originally find out about Smart Prop Trader?
Oh right, yeah. So yeah, at the time I was kind of on YouTube surfing around, and I had a little bit about like the prop firm industry. I think I had tried like one prop firm. It was the prop trading firm, I believe.
Okay.
Yeah, they were kind of an older firm. They were popular at the time. But yeah, so I discovered Blade on YouTube, and I saw that he was doing prop firm reviews. So yeah, I thought what he was doing was great.
Yeah.
Checking out different prop firms, seeing which ones were legit. And so yeah, that's kind of how it happened. At the time I was watching his videos, and then I saw he had announced.
Mhm.
I remember the video. He said, "Oh, I'm launching the fastest prop firm in the industry or something," right? So at the time when I thought he was launching his own prop firm, I kind of figured that because he knew the industry and kind of knew what was right and what was wrong, that I figured his prop firm was going to be great, automatically. So yeah, so that's kind of how I discovered you guys, and then I definitely had you guys in the back of my mind, planning on eventually taking a couple challenges and trying you guys out. So yeah, fast forward, I think it was around May. That was when I finally bought a couple challenges and
Okay.
started trading with you guys. And I mean, I gotta say, to be honest, I'm definitely pretty experienced now in the platform industry, but I definitely gotta say, I would pretty much put you guys number one right now. I don't really think anybody can compare.
Thank you. That means a
Yeah,
lot.
no
And
problem.
I know our team will love to hear that. We always love hearing feedback from our traders and everything going on in the industry. We just really want to make sure that we're doing things right. We're supporting the trader. We're being innovative and quick as we can be, but also taking our time to put out a good product, right? And a good system. So I appreciate you recognizing that and having a good experience so far. We always love to hear that. I know Ryan and Blake will be super excited to hear that as well. So thank you.
Oh yeah,
um,
definitely.
yeah. So let's get into your trading strategy a little bit and your approach. So how has that evolved over time? I know you said obviously you've been in the group and you have a mentor. Have you kind of strategy hopped a little bit, or like where have you landed now?
Oh right, yeah. So yeah, I was definitely one of those guys. I definitely did the whole range of strategy hopping, right? Trying anything and everything. That's it's that natural cycle, right? Every trader goes through it. You believe that the next strategy is going to be the thing, right? So
Right.
you're just trying all different things. So it was kind of interesting. So the first year I was in the academy, I was actually doing binary options, which
Okay.
I don't know if you've heard of that. So it's basically like forex, but it's kind of more simple. So it's like time-based trading.
Okay. Okay.
So you predict like its price going to be higher or lower in the next 60 seconds or 3 minutes.
Mm-hmm.
So yeah, I tried that. Yeah, it's pretty interesting. So I tried that. And yeah, it was a lot of fun, but as you would assume, it's definitely a lot more higher risk and a lot less control than like with some like forex.
Definitely. Yeah.
Yeah, so yeah, I was doing that like the first year and definitely had some success with it, had some struggles with it. But then yeah, at the time, so I had a couple strategies I was testing out, like retail strategies, basic stuff, like right, all the support and resistance, trend line, all that stuff. Yeah, and then fast forward like a year later, it was around I think like mid 2021, I got into what's called smart money concepts,
Okay.
which I think now it's becoming a little more popular. So yeah, there was an educator in the academy. He taught it, and I liked him a lot. So I was watching him kind of getting the basics down, and then after so what happened is he brought my mentor on as a guest, and
Okay.
my mentor kind of showed his strategy. So what I'm trading now, it's kind of like a branch of smart money concepts, but it's a little more complex, and it's called a Y call theory.
Okay.
So yeah, so it's a methodology. So it was made by a guy. His name is Richard Wyckoff. He was like a famous investor.
Yeah.
And it's based off of the whole idea of just like supply and demand, and basically being able to track institutions and when they come in and accumulate or distribute orders.
Yeah.
So it really kind of veers away from instead of being more like technical based, it's more understanding the process of like what happens when price moves, pretty much.
Nice. That's really interesting. If you go back further in our channel, we have a video on the Wyckoff strategy, but it's
Oh,
cool.
really?
I've never met a trader that's his sole strategy. So that's really cool to learn about that. That's amazing. How would you say you manage risk in trading? Like what steps do you take to minimize that risk on a daily basis?
Oh, right. Yeah. So the one thing about Y call theory is it's a very interesting way of trading because so the way I kind of attack it, I'm very much trying to assess risk and cut off as much risk as humanly possible. So it is one of those type of strategies where you are focusing on more where you might lose 6 or 7 out of 10 trades, but your winning trades are going to be very high risk reward essentially. So the way I kind of approach it is because I'm taking trades that are high risk reward, it does allow me to risk a lot less and still be able to get bigger rewards, which I do like a lot.
Yeah.
So that's kind of how I approach it. Yeah, so I'm definitely a lot. I would say with me personally, it's funny because most traders, right, their initial struggle is like, over leveraging or risking too much.
Mhm.
But it's funny because for me, I've always been kind of the opposite. I feel like me growing up, not having a lot, I've always been kind of naturally averse to risk. Like I don't want to make the wrong decision or
It's a little more
or take that
conservative.
risk.
Yeah.
Right, exactly. Yeah. So I feel like for me, I've almost had to like force myself to take on more risk and not be too conservative. You know what I mean?
Yeah.
So I definitely think that kind of helped me in the beginning, not blow too many accounts and stuff like that.
Good.
But yes, yeah. So that's kind of how I approach it. So with the trades I'm taking, I'm definitely a lot more conservative. Whether it be even a trade where it's just 0.25% or even sometimes it could be 1/8%. I'm risking on a single trade, but with the style that I'm trading, I'm able to still get great returns even if I'm risking really small amounts.
Very cool. So interesting. So within all of that, how do you stay up to date on market trends and news, and what kind of resources do you rely on for market analysis? Is that kind of all within that Wyckoff theory as well?
Right. Yeah. So as of right now, so in the past, I used to kind of trade pretty much everything. But yeah, as of right now, I'm pretty much only trading like indices. So like US 30, SPX, and NAS.
Mhm.
So yeah, so right now, it's pretty simple. I kind of I wake up like New York open around like 6:30 a.m. Pacific time, and yeah, I only trade like 3 hours a day. So yeah, as far as like news and stuff, it's definitely a whole nother world, when it comes to like economics and understanding like how news affects the market. But yeah, I'm definitely, pretty tapped into trying to stay up to date with like every news event, So it's a pretty normal thing. Like start of the week, you pull up like Forex Factory, and that's like the most popular place to see all the news. So I'll go on Forex Factory and just be aware of like red news, stuff that's going to impact the market.
Right.
But in general, yeah, it's definitely the way I trade. It's definitely not based off of news, so I can kind of I can be aware of news, but I definitely don't have to rely on it, which is nice.
Yeah, that's great. So how would you say you deal with like the daily pressures and the stress of trading? Do you have something that allows you to take your mind off of that? Like walk me through that process for you.
Right. Yeah. Well, yeah, definitely. So yeah, I would definitely say, the biggest thing I would tell most traders is, for me, when I decided to really kind of take my trading and kind of, cut it down to a smaller window, I think that helped a lot with the stress, you know what I mean? And especially, right, because if you wake up, if you're trading, 7, 8 hours a day, I feel like a lot of traders think, okay, if I trade longer, I can just make more money, right? It seems logical to think that way. And you find out very quickly that, the longer you're on the charts, the more opportunities there are to, make mistakes or get greedy, or, maybe you should have been done for the day, but there's that one last setup, and then now you're in a rabbit hole and take 5, 10 more trades.
Right.
So yeah, I definitely think, in general, I definitely think when it comes to like the stress, when you have a plan in place and you're kind of just going through the motions and it's just repetition, I definitely think that takes some of the stress off of it, because you know what you're doing. So yeah, I would definitely say like the biggest thing with stress is just you have to have a plan in place, because anytime you hop on without a plan, right, what's going to happen is basically if things go well, you're going to have a pretty calm morning, and then if things go bad, you're going to end up in just this rabbit hole of, right, greed and stress, and you might look up and, maybe you lost way more money than you would have, or, right, maybe you break your trading plan in a split second, and then, you look up and you're like, oh, what did I do, So yeah, I definitely think, just sticking to a plan, having a structure in place, So for me, I'm pretty concrete, I have a strict schedule, so my trading window. So normally I stop at like 9:30 Pacific time in the morning. So yeah, so essentially, once that 9:30 on the dot hits, I'm just done. So it doesn't matter if it's 9:35 and there's a perfect setup. Just having that discipline of what, my window's done. I'm done trading. And I think that's just made it so much more stress-free. I know my window, and I just hop on, and the goal is just, okay, let me take all the trades that confirm in that window, then I'm out of there.
I love that. So anybody watching this, consistency and discipline, that's something that's very important to remember, and goes back to you sticking to your strategy. And so easy, like you said, to go down that rabbit hole if you don't have that, strict mindset and that strict strategy in place. I know a lot of traders deal with that. So thank you for sharing that. Are you able to walk me through a successful recent trade that you made and just kind of how you went about that?
Yeah, I think I can probably show you something.
Okay, cool. Here.
Okay, so yeah, so you see right here. So essentially, the way I trade, the one thing that's unique about it is, most traders, right, tend to kind of stay on a little bit of a higher time frame. Whether it's 15-minute, hour chart. But the way I trade is pretty interesting. I like to go super down to the smallest chart that's available. Mm-hmm. So you notice here I have the 15-second chart and the 5-second chart. So essentially, on the 5-second chart, it's one candlestick every 5 seconds. So it's definitely super fast paced in the beginning. But yeah, once you kind of understand Wyckoff theory, you understand, that the market really is fractal. So when I say fractal, essentially I mean that, whatever price action's happening on the hour chart, the exact same thing is happening, no matter how lower time frame you go down. Mm-hmm. So if we look at the setup here, so if you notice this push that I have right here marked up, I use Fibonacci's a lot, and the reason for that is because if you notice that when institutions, anytime they move the market, they're constantly selling to buy or buying to sell. So they're they're, putting in their own orders to fill their own orders, because they have so much capital to work with.
Right.
So what happens a lot is, when an institution, right, if they buy the market up into like a premium price to then sell it off, a lot of times they end up with, like buy orders that are in drawdown, and they usually have to come back and try to mitigate out of some of those orders.
Yeah.
So if you notice this push right here, basically Wyckoff theory kind of follows a market cycle, and I'll kind of show you a little bit of that. So if you look at this here, at this setup, so this push right here, notice how price ends up sweeping this high, right?
Mm-hmm.
And then we end up, going lower right after that.
Mm-hmm.
So something like this, I would call this a redistribution. So essentially what this is, to my eye, is it's, whatever institution is orchestrating this, it's essentially an institution coming in, trying to push price into premiums to fill more sell orders and then continue lower, to take profit.
Mm-hmm.
So essentially when I see this sweep, right, the moment we confirm this low here, this would now be an active redistribution for me. So essentially, when price comes back into this area, I'm going to be looking for sellers to come in and try to sell it off again, pretty much.
Yeah. Wow.
So I'll go ahead and mark this here and just go redistribution. Okay, so if you notice here, so I have a Fibonacci that I use, and if you notice here, I only use two levels, the 80% and the 50%. So, if you start to back test these mitigations, you'll find that any institution that comes back, they love to get to that 50 or 80% point of, whatever push was never mitigated. So essentially this Fibonacci here, I'm just drawing it from like this push to this push.
Yeah.
So essentially the way I'm seeing it is, whatever institution was here, they bought to sell. And now, this area here, there's drawdown in all the buys. So as they come back up, they're looking to mitigate out of whatever buys were left here, and then essentially fill more sell orders in here. And basically in here is where I end up taking my entry. So we'll kind of walk it down. So if you notice here, so the way I kind of approach it is, if I have like a point of interest, right? So this redistribution here would be an area where, okay, if we come in and I see a certain confirmation, I'm going to look to sell. Mm-hmm. So once we get into this area, that's when I'll, get down to the really low time frame and kind of look for my entry. So let me show you this. So we start to go down to the really small time frames. You'll kind of see here.
Wow.
Actually, it's a little overwhelming, being on the second chart, but for me, I'm definitely pretty used to it.
Sure, yeah, this is probably so easy for you to read.
Yeah, okay. So if you notice here, so here's kind of where the fractalness of the market kicks into play. So if you notice this thing here that I have marked up, where it says distribution. So essentially what happens is, so when price came into this area, this right here, this is what I would call a schematic. So if you think about like all of like the retail traders and like different retail patterns, whether it be like a pendant flag or like, right, double bottom, double top, like all the different candlestick patterns. So what kind of happened over time is, these schematics that happen when orders are being filled, they started to get named, retail nicknames, because essentially retail traders were seeing these patterns, but didn't really know what to call them. So they would kind of just give them names based on how they look, So the way it kind of happens is, so when price comes into this point of interest, right, I'm looking for a sell and I'm looking for a very specific confirmation. Mm-hmm. So what happens here is, so we got what I would call this right here. I'll actually do replay mode. I'll just go back to here. Okay. So this right here, so I would call this it's called a type 1 schematic. So essentially a type 1 schematic, so the key thing is these schematics, they can happen, like I said, whether it be, the 1 second chart, right, the 5 second chart, all the way up to, the 4 hour chart. When this happens on a lower time frame, the way I combine it is when price comes into that higher point of interest, if I see a schematic, and very specifically a type 1 schematic on even the 15-second chart, it allows me to take an entry with an insanely small stop loss, understanding that when this type 1 schematic confirms, that price should never trade above it from that point. So if you notice here, if you notice right here, so we kind of zoom into this. So I have a very specific criteria for the type 1, and it's pretty simple. So essentially, so when a schematic starts forming, you're going to have a trading range, which is essentially just going to be like kind of see the top and bottom of like the first drive essentially. So like as price starts kind of making those lower lows or, you know, higher highs,
Yep.
I would call each one of these a drive essentially. So yeah, so you kind of see here, so price starts creating this schematic, and I have a very specific criteria. So essentially we look for 3 drives, and then after those 3 drives, we look for basically a shakeout or a manipulation. So essentially, so you notice right here, right? So we get this first drive here. Okay, and now the trading range is kind of set, top and bottom. And then see, we get this second drive, right, that comes down. And then this right here, I would call the third drive of the schematic. So at this point, once I have 3 drives, I'm looking for that shakeout to confirm. And once it confirms, then my entry is ready to go. So if you notice right here, so after these 3 drives, so we get the shakeout, which is this right here. So notice how price here, how we sweep above these highs, right here, and then immediately break the opposite direction, right? So once the breaker structure happens right here, because if you notice here, so the way I would read structure is I would read it from here to here, like that, right? So even though I have these 3 drives, the structure break I'm looking for is this low right here. So once this confirms, now I'm ready to take my entry. So once the schematic confirms, going back to that Fibonacci, I use those 2 levels, the 50 and 80%, and essentially I'm going to place my sell limit at either the 50 or 80, depending on which one has, you know, the better risk to reward. Or kind of normally the way I do it is if the 50% gives me a good enough risk to reward, I would take that. Or if I deem the 50 to be too big of a stop loss or, you know, not worth it, I would take the 80%, looking for a tighter stop loss pretty much. So yeah, so if you notice here, so basically what happens is, and like I said, it doesn't matter what time frame you're on, even if you're down to like the 1 second chart, if a type 1 schematic happens in that point of interest where sellers came in the past, then we know that once it confirms, there's a good probability that essentially price will never trade above this shakeout ever again and will continue to drop. So if we kind of play this out, you'll kind of see what happens. So after the entry breaks, we get our confirmation right here. I'll just go and put an arrow right here so you can see. Yeah, so once we break right here, that confirms the schematic for me, and now I place my limit. So if you notice here, we kind of play this out, and you'll kind of see what happens. So price starts to fill orders right here, but I understand that this right here is going to get me up to my trade pretty much, and you'll kind of see what happens. So we kind of play this out. So notice how price ends up once again shaking out right back into my entry, and then we continue lower, just like that.
Interesting.
Okay, right there. Okay, so if you notice right here, right, so here's where the fractals comes into play. So this right here, what took place from here to here, right, how we get that shakeout once again, notice how these highs here get swept, and then price continues lower. So this right here, I would also call a redistribution. So for me, right, this, what happened right here, even though it's a 15-second chart, to me, this is no different than what happened over here on the 5-minute chart. See my point? It's the exact same thing, just on a smaller scale. So like, that's kind of how I read the market. So if you notice here, we can kind of see how it plays out. So you can see, so like on a trade here on SPX 500, you can see that because of my understanding of the schematics, I was able to take this trade with a 3.5 point stop loss, which I don't know if you understand like stop loss sizes, but for SPX, this is like, it'd be impossible to take a trade this small for in a normal case, right? Yeah. So if we kind of see it, yeah, so I'm actually still in this trade on my personal account, unfortunately not on my SPT account, but yeah, we kind of look at it here. So if I actually go play this out to current price action, we can kind of see what happened. So you kind of see, so from here, as you see, after price triggers my limit, you can see that that schematic ended up being the turning point. So I'll just throw a line right there. And you see that price never returned after that schematic. So you see, we actually came down here. So yeah, so for a trade like this, you know, I've already kind of partialed it out, right, and managed it accordingly. But you can kind of see here that to the low, this trade has already ran for a 1 to 20 risk reward, which, you know, like I said, for me, that's like pretty normal risk reward as opposed to, you know, other people, you know, in like the retail trading space, you know, it's normal to catch like a 1 to 2 risk reward, 1 to 3. So yeah, but like I said, with the style in which I'm trading, I can catch a trade, you know, I can risk $100 and make, $2,000-$3,000 on a single trade because of my understanding of these micro schematics that happen on the really small time frame. So essentially, so that's kind of how I trade. So essentially, I'm looking for points of interest, and when price gets into those points of interest, that's when I'm looking for those type 1 schematics. And then once those happen, I'm going to play those and understand the probabilities that, okay, it's a good chance to play out. And like I say, the great thing is that these entries, when they happen, the stop loss is so small that my risk reward is always great. So, I mean, it's incredible because with the way I trade, I could lose, 9 out of 10 trades, but actually still be profitable if my risk management is correct.
Right.
Yeah, exactly. Yeah, so I'm still in the trade. So essentially, now I'm just looking for price to kind of continue and essentially take this next low pretty much. And then we'll kind of, go from there.
Thank you for sharing that.
Oh, yeah, no problem.
I know our other traders and viewers will really appreciate that.
Definitely.
Awesome. So, gosh, that was great. How do you feel like you track and measure your trading performance? Like, what metrics do you use to assess, your successful trades?
Oh yeah, definitely. Well, yeah, I would definitely say that, when it comes to, journaling and tracking the trades, I think it's one of those things where, I feel like a lot of traders, they want to track their data, but, they either don't know how or don't know an efficient way to do it. And, it definitely can be a tedious process, you know what I mean? So yeah, I definitely kind of, dipped and dabbled in different ways to do it. Initially, I was using like Excel spreadsheets, so I kind of would, create Excel sheet and track it that way. But I've actually got into, using different like online journals, which has been really helpful. So yeah, so there's a journal I'm using. It's called Edge Walk. And it's like an offline journal, and it's just so great, because essentially you can import all your trades in, and then you can add different criterias and track whatever data you want to track. And it's so it allows you to get into your trading, but it's not super tedious, when you're having to like put in all the numbers over and over again, you know what I mean? So yeah, I definitely think online journals, changed the game. So now, it's just as simple as get an online journal, plug your trades in and kind of take a look at what it's showing you. Then, just start diving into it and kind of figuring out. I mean, it's a tough thing, I think, in the beginning, because you don't always know what you need to work on. You're kind of seeing this, your journals and stuff, but
you have to go through it to know what you need.
Right, exactly. Yeah, so I think in a way the best way to do it is, kind of attack one thing at a time as a trader. So the way I kind of do it is, I feel like as a trader, you want to break up like each piece of it as like a separate skill, as opposed to just saying, okay, I'm doing well or not doing well. I feel like, every skill as a trader has to come together and kind of create this harmony, So I think, you might have one, so, you might have one trader where, you might be great at risk management, but then another thing you're not good at. And I think, in a case like that, you want to kind of target what you feel like is your biggest weakness, and just keep doing that. And then over time, if you can make like your worst aspect of your trading get better and better, it'll kind of round things out. And eventually you'll, start to put everything together.
Absolutely. Yeah. So kind of tying into what you just said and kind of the whole idea of this interview so far, what advice would you give to somebody who is wanting to get into the trading industry right now?
Definitely. So yeah, I would definitely say, I think trading is a thing where, when you get into it, there's going to be a moment where you realize that, that it really is you versus you, you know what I mean? And I think most traders in the beginning, you're kind of struggling between feeling like it's something you're not doing right, but that natural feeling of, maybe it's not me, or maybe I'm doing the wrong strategy, or this is wrong, right? And I think that moment when you kind of sit back and say, okay, I want to do this, right? It's not easy, but the reward is worth it. I think when you decide, okay, you know what, I'm going to take full responsibility that my results I'm in control of, and no matter what goes wrong, you have to understand that every time you blame something on the outside, your trading is going to take a step back, right? And it's a tough thing because our instinct is, we want to blame, like, oh, it's that, or or it was raining outside, that's why I missed the trade, right? But yeah, so I think that's like the most important thing. I feel like yeah, trading is an incredible thing. Obviously, the prop firm industry, it literally has changed the game because, just back to 2020 when I got into it, the mentality was, right, throw a few $100 in your account, start to slowly grow it.
Right.
I went down that path. My personal account, I was investing all my money into it, trying to grow it. But yeah, the moment the prop firm industry took off, I knew, okay, this is where I need to be putting my time into because, the ability to leverage, bigger capital and have that access to bigger funds, which I mean, it just totally changed the game. But yeah, I would definitely say, I mean, right now, I mean, it wouldn't be a better time to get into trading now with the prop firm industry. It's so accessible. But yeah, I think that's the biggest thing is you have to take responsibility, for what you want to do and say, okay, I want to do this. It's hard, but have to attack myself, and understand my weaknesses and just take it one day at a time. And yeah, just understand, okay, I'm not on any timeline, like, I mean, the skill set, we know how, the reward it can give and what's possible. So I think, just getting rid of timelines and deadlines or, having to be at a certain point at a certain date, right, and all that stuff, and just say, okay, you know what, this is what I want to do. I'm just going to take it one day at a time and just focus on improving every day. And then I think over time, you'll kind of see, all the work you put in, it'll start to slowly come into fruition, and then eventually say, okay, I have a grasp on what's going on, then now things get easier,
No, but circling back to what you said and just kind of all encompassing the message that I feel like you're portraying is it's obviously so important to have a group and a mentorship to really have that support from, but also realize that this is all about you, the trader. It's the trader versus trader. And I think that, finding a balance between those two is probably one of the most important things as a trader, that you have to really hone in on and find a balance of, because you're competing against nobody but yourself, but you still need that support. So yeah, well, that is all I have. Thank you so much for your time tonight. I know you're traveling, so I appreciate you taking the time. And I wish you the best. Hope for many more payouts, many more interviews with you. And yeah, you have my email if you have any questions or anything at all. I'm here to support and help you. So thank you.
Yeah, thank you so much for everything. Yeah, I'm definitely, it's definitely an honor to be, asked to, sit on here and talk with you. And I'm definitely looking forward to being with SPT long term, so I'm definitely excited for sure.
Thank you. Thank you very much. We really appreciate that. And yeah, likewise, hope to do another interview soon.
Yeah, awesome. Okay, sounds good.